We want money. Let's get it started. Welcome to it, guys. On today's Money Mitch, we'll be explaining what was said by Fed Chair Jerome Powell, what industry you might be missing the big move in, and of course, check out why I think industrials are the play that's moving forward. We'll talk about that all in here right now on Money Mitch. And of course, a great interview coming in here with our featured guest, Pubmatic CEO Rajeev Goel, the ticker PUBM. Stay tuned, guys. Find all out about why digital advertisement is such a massive opportunity. Stay tuned, guys. Welcome to the show. Had to show you off a little bit, Dylan. Appreciate the message. Let's get it started. Welcome to it, Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on? How we doing out there? I hope you're enjoying your donut in peace. I mean, I want a donut. What kind of donut we talking about? We talking Dunkin' Donuts or Krispy Kreme? You guys let me know in the chat what's your favorite. Let's get into the market, talk about what we saw today. Before we dive into the SPY, of course, what was said by Fed Chair Jerome Powell. So really, I mean, there's a little bit of a mixed message. I thought we were going to get that same thing. Another mixed message. I really didn't see a clear note here, but Fed Chair Jerome Powell said Wednesday he still sees interest rates ahead, though he noted that the implications of the U.S. economy are highly uncertain from the Ukraine war. He said that the Fed wants to get inflation under control, but that the bottom line is that we will proceed carefully as we learn more of the implications of the Ukraine war on the economy. We have phased out our net asset purchases. I thought that was an important statement. With the inflation well above the 2%, a strong labor market, we expect it to be appropriate to raise the target range for the federal fund rate at a meeting later this month. So definitely stay tuned for that, guys. We're going to get more out of Powell later in the month. I think that, of course, now it's almost a given of the 0.25 interest rate hike. Now, the real question is 0.5 out of the question? I don't think it's out of the question. I think, Powell came back and tried to recover that and kind of really just say that really there's nothing that's out of the question, really. So we'll see what happens here. Of course, inflation getting out of control, right? I think we're going to keep watching that inflation number because it might just take off to the point where the Fed have no choice but to kind of take action. I've talked about it on my Twitter as being handcuffed right now, and a lot of decisions are being handcuffed by the situation that's going on in Ukraine. All right, let's keep going. Let's get into the overall market and see what we saw out there. Let's go. All right, going to take a look here at the overall market, the SPY. One of the things that we've been pointing at is when are we going to break? Are we going to break down this? We looked like we were breaking down here. We actually came back on up towards that 438s today. And then it looks like we just don't want to turn around. Sorry about not changing the background there. My bad, guys. That was from the last show. There you go. Switched it on up there. Appreciate you guys in the chat mentioning. All right, let's keep going. The SPY, as you guys can see, the SPY hasn't wanted to turn around from that 438s. 438s is so vital, guys, to this. I'm going to be watching this level tomorrow, but as you can see, we got above it today, and then quickly we get right back below it. After hours, we're right back into below that 437.95. I'm watching that as a major level. We need to break above that. One thing that I'd kind of point out, and we can look at the prior time that we bounced, we had 4 days sideways, right? We had a pop up 1, 2, 3, 4 days. We went up to the high, and the very next day we went close towards that high and really started rejecting. If we take a look here, what do we get? We got 1 day, 2 days, 3 days, 4 days, now sideways on that level. The real question is, can we get above that level or below the 428? We're stuck in sideways trend right now. And the chop, I'm sure, is getting some people, but we're mixing it up, and we'll see what happens. What's the valuation on Snow? How much money did they make? I could talk about Snow. I see you guys talking about Snow in the chat. We'll get into that a little bit later. I know Jay's probably keeping a close eye on it. Let's go. Let's get some green hands, Wayne. How we doing out there, DF? Joining in from UK? Hey, welcome to it. We're in the UK. Where we looking at? All right, let's go ahead. Let's keep going in here. It's good to see everybody saying hi in the chat. Let's go and look at some of the stocks that had a great day today. Of course, what leads? Industrials led the day, but right behind it, financial services. The surprise of the day was financial services. To me, the one that I expected was basic materials. Basic materials really pushing back on up. Of course, coal trade, guys, the coal trade. We've been talking about the coal trade. We'll see what happens. Yes, England in the house. We're looking at coal trade here, and look how this index took off today, guys. The whole index taking off, and this is why I like paying attention to industry analysis and looking at the sectors. We were looking at basic materials. We've been looking at coal. We even called out what was our stock that we gave yesterday in coal. I'm going to catch up in the chat. What do you guys think in the chat? Did you guys catch it yesterday? Were you guys here? What was the coal stock that was mentioned yesterday? I want to see if anybody knows it, if anybody caught yesterday's show. I went really quickly through it, but of course, you guys know I've been a big fan of BTU. This has been ripping, guys, now 4 days in a row, now up there past the 20s, even after that big pullback day. This has been a great stock. I didn't catch it, of course, in any of this move, and a little part of me is a little upset that I'm not catching BTU, but at least calling to the name and calling for the eyes to take eyes and look at coal, because I feel like this has been the best trade and a lot of people aren't watching it. BTU being mentioned by Daryl. No, that one wasn't it. Hertz says ARCH. That was one I mentioned a little while back, but I'll tell you right now, guys, the one that I mentioned was METC. And I can show you guys this. Let me actually kind of pull it on up here. I'm pretty sure I have it. I could just pull it on up here so I can show you guys. Trying to pull it on up so I can give you guys the exact chart. We were taking a look at this literally for the levels through 1634. That's exactly the levels that we were looking through. Today we broke through that, and man, did we break through it. If you look here, it just kind of in pre-market was at 17, came back below that trend, and then really broke on out. That's METC. And man, this one has been a complete tear today in coal. 17.78% winner. Man, just giving it overnight. I didn't expect it to have that big of a move, but it was a monster rip. Other stocks that have been moving well. You could take a look here at industrial metals and materials. These stocks starting to get going. LGO. I haven't taken a look at this one before, but man, this one really started moving the last couple of days. Keep this one on radar. LGO. I'll definitely keep on watch. Of course, one of my favorites, PLL. Really getting going here. Nice chart now. I really like the weekly. It just put in a strong candle. We'll look for a pullback below this 54 level to see if we can catch some of these lithium players. Of course, in steel, we've been talking about X since Monday. And what did X do? It's going to give it to you. X going to give it to you, guys. X taking off here, guys, in the last couple of days. We've been talking about this since Monday. Now we're already up about 5, 6, 7% from that level. X looking really good. NUE also one of those given on Monday, pre-market prep. Really getting some strength there. NUE taking off. And another look on steel, you could also look at Cleveland Cliff, CLF. Look how that one's been moving the last couple of days. Since Wednesday, since Thursday, it's already made a 34% move up in steel there. That's Cleveland Cliffs. What a nice turnaround in steel. All right, gonna go ahead and catch up with the chat. What's going on out there? Day trading mom in the house. What's up? I love the name. That's what I like to hear. Box amazing quarter. MULN. I'll at least touch for sure. MULN. Box was one of my favorites back in the day. I actually called that one out. I still remember when I called it out, and that was back at this time. Look, This is what I love about TC2000. If I tell you guys a story, I can come back and check the dates on this so you guys can see this. Look how we were talking about this one in May. You guys can see it created May 10th. And look how this one's been breaking out since then. That was box. We were looking at that May 10th. Look where it is now since that pricing. Boom, baby. It never even went back down below that entry that we looked on box. Box has just been a slow runner on up. I love the weekly trend that it has. We caught it on the first flag of this, and look how this has just kept this trend. As long as that can stay in there, I'm still looking at box and bullish sense. So not a bad one, day trading mom, that you brought up. All right, let's keep going. Charge point up after earnings. Yeah, I could take a look at that in a second. I'm trying to get really quickly through a lot today. So if I don't get to charge point right here at the beginning of the show, stick around at the end. I'll try to touch it with some ticker time. All right, let's go ahead. Let's keep talking about some stocks. Look at AA the last month. Yeah, I mean, look at aluminum. The one trade that I don't think I've called out aluminum at all. It's just not my favorite trade, but it's been doing really, really well. If you take a look at the daily chart, and I love this action here where you come on up and you just curve right back through that 80. It's definitely been super strong. All right, just keep watch other areas that could come back. Gold took a sidestep today, but doesn't mean that it really kind of came back or gave up the gains there. I would watch for gold to take on off tomorrow. Just because you get an inside day does not mean that it can't keep going. All right, let's go ahead. Let's get into a different area here. Now let's talk about reopening trades. I need to quickly go through this. I got about 5 minutes. We're going to get into that interview coming on up with Pubmatic CEO Rajeev Goel. That's PUBM coming on up. I want to get to that, so it's time to run through reopening. All right, guys, I did take a swing trade in AAL, guys. I opened that up today. I'm in closer towards 1648 now. I did add on the retrace. The out is going to be 16, guys. And so we're looking at this mainly on the daily candle now that we're in. So we're taking an entry here right above kind of the close right now where we are. And we're going to look to risk down to the 16. So we're getting a quick risk. It's okay if we get a slight tick down below that. I'm actually going to give it down towards 1590, and we're going to draw out this trade completely. And then we'll look at it right here on Money Mitch to see how it works on out. I'll let you guys know if I do have to get on out on the red side. Of course, you guys can watch live trading to kind of catch that, but I will be watching this one to get on back through the 1746 up there to 18 will be the first profit. That'll be the first reward one. And then we'll look to continue kind of riding it up there towards 19 and 20s. We'll see how the momentum kind of continues, but this is kind of the trade setup. We'll see if AAL can take on off. Also taking CCL, guys. We'll see if this one can hold this pullback candle right here. This is the important one. You guys see them drawing on out. So the 1865, let's say 1850s is the risk right now for this swing up towards 22, and we're looking for a move towards 24. First sale will be up at 22s, probably 2190s, because you can see the resistance and the wick right here. We'll look to sell some at that 2190s, and then look for a move back towards 24. Of course, one of these, they haven't been looking that great right out the gates. I'll go to a different one now. Let's take a look at some lodging plays today. I did like Hilton today. I wasn't able to get in on this one, but really did like how it was pulling on back right here. My entry that I called out was in the 145.30s. I wasn't able to get the entry fill, but as you can see, I would still be in the green right now, and I do like this trade going into tomorrow. I'm going to be watching Hilton. Hyatt is another one I'd give today. Had a good day. Look for this to kind of take on off and get back towards 100. And the real good one that I took on the swing today was Airbnb. Took this one, guys, already into the green area. As you guys can see, we set up this trade in live trading. It was an awesome trade. We're already into the green, and we're going to keep holding this. I do think that we can get back up towards the 170 in Airbnb. That would be a move up into this spot. I'm going to go ahead and just draw a green box for us. That's where we're going to be our reward profit Where could we get out? Underneath the 150s will get me out of this trade. So if you guys see where the 150s are, we're right underneath it, right about here. So we're really close to that level. We're at 157, but that's going to be the risk on the downside, that 150 area. All right, the last area I tell you guys where you probably aren't watching the reopening trade is leisure. Take a look at some of these charts. I'm going to quickly roll through them because we're going to get into our interview next. But just take a look. If you're not catching these, I definitely want to put these on your radar. All right, let's go ahead. Let's take a look at some of these leisure plays. So one is, of course, play. Why not look at play on play, right? Look how this one, we've been talking about this one since it was pushing on up. It held the pullback here. We've been looking at this one for a little while now. Now look at the weekly. This is really starting to get strong. I'll definitely be paying attention to this one, see how it can continue making a move. I think it takes out 50 pretty soon. And then from there, we'll see if it can continue moving up there to 60. But hey, not a bad looking stock here, reopening type of trade. And if you look here on the monthly, you see an even further trend line that you're trying to get to and get back on up through. Let's see if we get through that 50 and start pushing in play. Dave and Buster's here. We'll see what happens. I'll give you another one here. Six flags. Look at this chart setting on up. If this one gets on up through these highs up here, through 48, up there to 50, that'll be looking really good in 6. Another one to keep on watch. C's has been leading here. Look at this leisure play lately. Look how the monthly, look at the daily. This has really been strong. We'll see if it takes out the high tomorrow. SeaWorld's here. Last one I'll give is golf. I had to bring a golf ticker in. I know Rajeev would like a little bit of golf action, so I had to bring the golf in. Looking at this one as a leisure play, bouncing off the bottom. It's an interesting chart. If you take a look, we're going back all the way towards the monthly support here. From this is from June, actually May of 21. You had a low there of 42.39. We're going to look for that low to hold and for us to come right on back through the 50s. I'll be watching this GOLF golf. Of course, you could also watch Eli if you just want to maybe just watch Callaway Golf. And a cheaper name that is a little bit higher risk, but I'll just put it out there, is Drive Shack, which is kind of the copy of Top Golf, I'll call it. They want to do a little bit more of putt-putt action, and I can't blame them for that. I mean, I've been wanting to check one of these out. If you've ever been to a Drive Shack, please let me know. You know how I'm all about the story here on Money Mitch, and I'd love to hear that story. Let's go ahead. Let's get out of the stocks. Let's start talking about programmatic advertising and why I think it's such a great opportunity. In a second, we're going to get into an interview here with Pubmatic. But really, I think this is bigger than just Pubmatic itself as a company. That's why I call it a massive opportunity, because I've been watching this develop since essentially 2020. That's where I really started looking at digital advertising and how much of a leap forward it was going to probably take. And then the pandemic hit. When the pandemic hit, I think this really just pushed the gas pedal to the metal. And from that, we've really seen digital advertising change. Of course, we've been hearing all over the news of different companies kind of with policies changing. We'll talk about that in our interview coming on up. You guys do us a favor, smash the thumbs on up if you guys are excited to get Pubmatic on. And let's go ahead. When we return, we'll get into the interview.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead. Let's bring on here my interview here with Pubmatic CEO Rajeev Goel. Let's go ahead and bring him on. It's not the first time he's on, so I'm excited to have him back.
Hey, Money Mitch, how are you, man? Good to be back.
Hey, it's definitely good to have you back, and I appreciate you coming and taking your time, especially around 4:48. I know the market's closed, but this is when I think it's best, to really take a deeper look into the story that is Pubmatic. So let's go ahead. Let's dive right in. You recently just released Q4 earnings. Can you give us kind of a quick recap of how the quarter went?
Yeah, absolutely. So it was an amazing quarter for us, capped off what I would say is a great year. For the year, revenue was up 53% on a year-over-year basis, so 2021 versus 2020. It's revenue of just under 227 million, but that's only part of the story. The other part is incredible profitability. So we have over 40% EBITDA margins for the year, fifth straight quarter of performance above the rule of 40. In fact, performance above 80 on the rule of 40. Rule of 40, as I'm sure many of your viewers know, is you add up the revenue growth rate year over year, you add up the adjusted EBITDA margin. If you're at 40 for both of those, you're in good shape. We're 5 quarters in a row over 80. So really just fantastic 25% GAAP net income margins. So really just an amazing quarter to cap off a great year, and we're excited for 2022 with a ton of growth opportunities ahead of us.
Excellent. So first, for my audience that might not know about Pubmatic, can you let me know what Pubmatic means by a cloud infrastructure approach?
Yeah, absolutely. So what we do is we help make digital advertising more profitable for our publisher customers. And we work with about 1,500 publishers around the world. These are companies like News Corp, eBay, and Benzinga. And if you've ever gone and seen free content on the internet, which obviously many of your viewers are doing right now, the way that free content is paid for is through advertising, right? It takes money to create content, takes money to be a journalist, takes money to be in the entertainment business online, and it also takes money to distribute all of that great content, servers and all of that kind of stuff. So what we do is we have private infrastructure in 8 data centers around the world where we process hundreds of billions of ads on a daily basis on behalf of our publishers, so that our publishers get more revenue for every ad impression that is seen by a consumer.
I know a lot of people have probably heard this term, but might not really understand it. What really is header bidding? And
yeah, so header bidding is a technology protocol that came out about 5 or 6 years ago, and it allows publishers to work with multiple sell-side platforms at the same time. And the reason header bidding came into existence is that many publishers used to work with Google, and they still do, but they wanted to work with other independent technology companies like Pubmatic. But in order to do that, there needed to be technology innovation, and header bidding was that solution. So now with header bidding, a publisher can work with Google, and obviously they're a very large presence, large force in digital advertising, but they can also work with a company like us. And so the result for us has been a massive increase in the number of ad impressions that we process, from what used to be billions of ad impressions a day to now hundreds of billions a day in the span of a few years. So it's been a massive benefit for us. At the same time, though, you can imagine when you're processing hundreds of billions of ad impressions, it's a lot of infrastructure cost. And so we are unique in terms of having our own infrastructure rather than using public cloud like an Amazon AWS. And the reason we do that is by using our own infrastructure, owning that infrastructure, we're able to generate better outcomes for our customers, and we're able to do so much more profitably. And you see that, in our profit margins. Very few companies out there in the software industry that are growing at the rate that we're growing, but also with that really strong profitability at well over 40% last year.
Let's get into a competitive advantage here. How does leader in buyer ad spend consolidation? How does that give you guys the competitive advantage?
Yeah, so that's another trend in the last couple of years, and something that we're excited to have pioneered, where buyers, while publishers are using header bidding to work with more sell-side platforms, buyers, on the other hand, are doing something that's a little bit opposite, which is they're saying, hey, I'm seeing all of this inventory from so many different platforms. I actually want to consolidate down to fewer platforms to buy on. And this is that buyer spend consolidation. And we've been building a lot of technology for buyers. We have a very transparent business model. We focus on the highest quality inventory. And of course, we're global, so we do business around the world, and we're omni-channel. So buyers can work with us on connected TV, on mobile app, on mobile web, on display advertising. And so buyers are rapidly consolidating down to the fewer and fewer sell-side platforms like Pubmatic that they work with. In fact, last week we announced a new relationship with WPP's Group M. Group M is the largest media buying agency in the world, and they are working with us in Europe and elsewhere around the world, specifically with CTV and online video. And so when that happens, those are dollars that are only available on the Pubmatic platform, not available elsewhere. So great ability for us to help our publishers and also grow our own business.
Definitely. Let's get into a little bit of bigger picture here. In 2021, digital advertisement grew 31%. Projected growth is down to 17% in 2022. Why do you feel the drop off, and how do you see the speed of digital advertisement really growing in 2022?
Yeah, so you cited those numbers correctly, but what I would say is that the market is massively bigger post-pandemic than it was pre-pandemic. Right. So if we think about, the rate of growth pre-pandemic was in the low teens, maybe 10 to 12% for digital advertising. But what we all learned, and I think we all saw during the pandemic, is that a lot more things can be done online than we thought. So for instance, fitness classes, seeing your doctor, buying a car. Right? These are all things that we used to do in the physical world. I don't know if you know this, but last year in the US alone, 2,900 bank branches closed. Now people aren't, putting money under their mattress. They're still using banks, but they're doing all of that online, right? And so what's happened now is the projections for digital ad spend post the pandemic are $100 to $150 billion per year higher. So you're talking about a massive increase in the total addressable market opportunity. And so that's really exciting. And the good news for us is that because of what we've been investing in infrastructure, we've been investing in innovation all through the pandemic, and we're really seeing that investment pay off in terms of our growth rate.
Yeah, one area that I definitely don't see the trend turning around is us being more and more online, right? And so
that's right.
That's definitely a trend. I mean, look at us now, right?
Yeah, exactly.
So one of the things that we've recently had, though, in the news, of course, is Google kind of announcing its adoption of new privacy restrictions. Of course, this is following a move similar by Apple last year. Of course, this has changed the kind of advertising practices. How has this affected your business, and what do you see moving forward?
Yeah, so what Google announced is that 2 years from now, they're going to remove a tracking identifier that's used in digital advertising. It's called the Android advertising ID. So if you're on a Google device, an Android device, that's an ID that's present. As you mentioned, Apple announced earlier last year, so in kind of spring of 2021, that they were removing the equivalent identifier. And what we saw is that very negligible impact, if any, on our business. So when Apple announced that change, because we're omni-channel and diversified, what we saw happen is that advertisers shifted their ad budgets away from Apple devices and into other channels. And those could be Android, those could be mobile web, they could be connected TV, right? So if you're an advertiser, you got 10 different screens you can advertise to. And if you lose some signal in the Apple ecosystem, then you shift your money to the other 9 channels. Now, what Google has announced is that they're going to work with the industry over the next 2 years and make changes, remove that identifier, but create alternative approaches that are more consumer privacy centric. We plan to work with Google, as we already are, on those approaches. So I think we're going to come out at a fundamentally better spot. But again, even if Google, remove that overnight, because of our omni-channel diversification, we feel like we'd be in a really good position to be able to continue to grow, just as we did with the Apple change last year.
I agree. It's one thing that we're looking at, the omni-channel expansion, and is there any certain format that you're seeing have particular drive the growth right now?
Yeah, I mean, a couple of areas that we're really excited about. One is just generally video, and video comes in 2 forms. One is, connected TV or streaming. So think about this as 30-minute shows, 1-hour shows, kind of broadcast quality TV. And more people obviously are, not signing up for cable TV subscriptions or using this kind of streaming content. And they often don't want to pay, a $15, $20, $25 a month subscription fee. They want to pay a lower fee or no fee, and they're willing to take ads. So that's one type of video advertising that's growing really rapidly on our platform. In fact, in Q4, it was up 6x on a year-over-year basis. The other is online video. So this is more short-form video. Maybe you're watching a news clip or sports highlights. and there can be an ad in that. That's a significant part of our business, and that's also growing at a very rapid clip. And then the second area outside of video that we're really excited about, but it's still early days, is what's called retail media. So retail media is this idea that e-commerce companies, e-retailers, so a company that you might go to do shopping online, like an eBay, for instance, they're increasingly getting into the ad business. In fact, Amazon shared in their recent earnings that last year they generated $30 billion. That's billion, B as in boy, in ad revenue. So they're obviously a giant in the category. But just about every other e-retailer is looking to get into advertising because they have data about the user, they have websites, and they have apps. So they have a lot of the assets, and we feel like we're in a really good position to help those companies. We already work with several dozen different e-retailers, and we're always adding more. So we think that retail media is a great long-term opportunity.
Definitely. That's something that I noticed too on that Amazon earnings call. I thought it was really important, and seeing how the kind of the adjustment there, right? And where they're really kind of focusing now. They're seeing that as being one of their highlights of their earnings reports. So definitely something that we'll keep on watch, whether it be other e-commerce jumping into the space and pushing the gas pedal on the digital advertising. Let's go into a kind of last longer term question here. On the recent earnings call, we mentioned that market share objective of 20%. First, is there a timeline to kind of reaching that objective? And second, of course, how will Pubmatic get there?
Yeah, so we're super excited to think about the opportunity in terms of this, really, I think, aggressive market share gain opportunity. So we went public about 15 months ago, and we shared at the time that our view was that we had a 2 to 3% market share. We think at the end of 2021, we grew that by a full percentage point to around 3 to 4% market share. So really, significant growth. Now we think we can grow that over time to 20%. It will not be easy, and it's by no means a given. It's going to be a lot of hard work, and it's going to take time. I don't have a specific time frame to share with you here, but it's a multi-year trajectory and strategy to get to that point. And we think that our business model is really well geared to help us get there, because we have this great flywheel where we have high margin revenue, and that leads to an ability for us to invest in innovation so we can build a lot of products. In fact, we plan to double our engineering team in the next 18 months. And then as we build those products, we roll those out to our customers, and our customers use our platform more. And because we have a usage-based software model, we generate more high margin revenue as a result. And so that flywheel is really important. Our profitability is really important because it lets us keep innovating in whatever is the next great thing in digital advertising. And there's always something new and something big and something better that's coming. So we want to keep investing, keep innovating, and work our way towards that 20% share growth or market share opportunity.
Excellent. Now looking a little bit more short term, that was a long term. Now short term, what should Pubmatic investors kind of be watching in the next 6 months, next 2 quarters? What should they be watching out for?
Yeah, well, look, in our earnings call earlier this week, we raised our guidance both for full year 2022 revenue, and we raised our guidance significantly for profitability in the 36 to 37% EBITDA margin range. So I think what investors should expect from us is a really compelling combination of durable growth and profitability. And the market is in this kind of interesting flux right now. I know Chair Powell was I think out on the Hill testifying about interest rate changes. That's made the stock market very volatile, obviously, in the last couple of months. And so I think investors are looking for companies that can deliver both growth and profitability, so that whatever happens with interest rates, their investments are protected. And I think that's exactly what investors can expect from us.
All right, and I'll go to one in the chat. We did get a question in the chat, so I want to bring us in. We got a couple there that I can bring in. I feel like this question, it's not a bad question to ask. I don't blame you, Daniel. He wants to ask, why don't you authorize a stock buyback at these prices? How is the business right now in cash sense, and where are you guys looking at making further maybe investments? What is it looking like?
Yeah, look, happy to answer that question. So, we have been profitable for quite some time. Last year was our 6th consecutive year of profitability at GAAP net income, and it was our 9th consecutive year at adjusted EBITDA. We generated significant cash last year. So our cash balance was well over $150 million. All that being said, when we think about our long-term goal of 20% market share, we think there's a lot of great investment opportunities that we are working towards, growth opportunities that will help us get there faster, than a share buyback. And we think about that as, hey, we want to make our stock very successful for our shareholders. And right now, we think there are so many great investment opportunities that we want to keep that cash in reserve to be able to invest.
There you have it, Daniel, the one and only place where you could ask the question directly to the CEO and get an answer. I hope you appreciated that. Thank you for joining me. Appreciate it. Right here, guys, interview with Pubmatic CEO Rajeev Goel. Ticker, once again, guys, PUBM. And I've been watching this since IPO, so I appreciate you coming back on, especially right here on Money Mitch.
Thanks, Money Mitch. Great to be with you and look forward to the next one. Take care.
Definitely. We'll have you back on. There you guys have it. As you guys can see, the consecutive just profitability, I think that's something definitely to just keep an eye out for, guys. As a long-term investor, I definitely do think that there's a value that this is coming into play. And it's even coming into talks to being what's some consider a value play. So keep it in mind, guys. Like always, I'm not invested in it right now. I have taken it multiple times. So I'll let you guys know if I do get back into this trade. But like always, keep an eye out for digital advertising and how it grows and continues to grow, because one of the things that I think everybody can see is how advertisement has really changed and has been targeted to the consumer. I mean, let's just be honest. When I'm watching TV, I don't want to be watching and getting an advertisement about who knows, maybe some yoga classes. I'm not doing yoga right now. I want to hear about some market advertisements, some gambling, and that's what gets to me, right? That's what it's all about with programmatic advertisement, is getting that targeted ad directly to the consumer. We'll definitely take a look and see how these opportunities develop. Other stocks you guys can take a look at are TTD, MGNI. They're all in kind of the similar space. So if you want to take a look at those, feel free to do so. All right, guys, we're going to go ahead and get on out of here. Normally, I would take some stocks from the chat, but I'm already in completely overtime. I got to get on out of here, guys. Please smash the thumbs on up. Tell me you guys been enjoying this week. This is the third interview this week. We've been getting to some experts' perspective. I hope that you guys have been enjoying it. Take a look at some of these reopening trades, infrastructure trades. Those are the ones that I'm taking a look at right now, especially with the infrastructure. You heard yesterday Biden just continue kind of hammering on that. There's a reason why I'm going to be watching these, is definitely for that infrastructure to kind of keep pushing on up. We'll see what happens. Like always, smash the thumbs on up. Catch me tomorrow on live trading, guys. I will not have Money Mitch tomorrow. I will be heading down to Fort Lauderdale, having some fun, getting on some beach, maybe a little pina colada action. But I hope you guys enjoy it. Like always, stick right here on Benzinga. Let me know if you guys are enjoying the show. Hit the comments after. Until then, let's keep it going, guys. Let's go.